Hey guys, how's it going? Jacob here with StockGains and welcome to another video. I know we haven't posted in a while, but guess what? We're gonna start posting more. And today I wanna talk about risk management. This is one thing that is overlooked all the time by beginners and not really knowing proper risk management when jumping into trades in order to kind of stay alive with a smaller account. So let's kind of hop right into this and go over what you really need to focus on when it comes to managing your risk on every trade that you make when you want to start out as a beginner, or even, if you're having trouble with it right now. So the reason I have 500 and 1,000 here is because we're going to be talking about accounts that are between $500 and $1,000. Obviously, the more you go up, the less amount you want to use, but also the more you have, the better off you are when it comes to risk management and allowing yourself to make more money based on how much you use. The reason I say 500 or 1,000 is because you don't have to risk a lot of that account value to make a decent amount of money, let's say in a month or so. So if you're trading with under $500, I would recommend to probably just save up the money till you get to around $500, or just invest that $100 into something and let it sit there until you can put more money in and then get your account balance to around $500. We're gonna be talking in day trading terms. So right now, this is our account size, okay? This is a $500 to $1,000 account size, but we're going to be talking about a $500 account size and a $1,000 account size. So you always hear about using, 1 to 5% of your account size. Well, I would say that is not a bad rule, but when you're playing with this little amount of money, if you think about 1% of $500, that is $5. If you were to hit 100% gain on $5, you would be gaining only $5. Obviously, with 1,000, that would be $10. So I would start off saying, I wouldn't recommend using 1%. Now, obviously, if you can start off with 10,000 or you can start off with $100,000, then 1% is a little better risk management to take. And that way you're not risking much at all. But as you scale your account, you can lower your risk and still make more money as you're lowering your risk. So right now with $500, I would recommend using 10 to 15% of your account size. Why do I say 10 to 15%? Because think about it. 10% of $500 is $50. Now, that is $50 per trade, okay? If for some reason you hit 100% on a $50 trade, you get a plus $50 profit, right? And then that's a 10% gain on your entire account size. Your $500 account has just made 10% if you make 100% on your $50 trade. Now, this also allows you to make 10 times $50 trades, right? With this $50 entry, since you're only using 10% of your account and you lose 50% of that, you only lose 5% of your account size, okay? Now that is big when it comes to terms of a big account, but when you are starting off with this small of an account, you don't want to have to be scaling at a snail's pace. You want to be able to scale at a decent rate. So that's why, when you're using 10% of your account size, the only time you should really be doing that is when you have a lower account. Let's look at this again. That's only 5% of your account size. That's if you lose 50%. All right, so what is that? That's minus $25. So that's half of $50. So the thing is, if you were to lose $25, that is not a big dent in your overall account size. Plus, you have now 9 more trades of $50 to make up that $25. The best part is, if you are down 20% on your $50 trade, okay, if you're down 20% on your $50 trade, more than likely you should close out. So all that's saying is, okay, I'm down 20%. There's no reason to hold this to lose 50%, unless you're, swinging, have enough time ahead of you to, gain that value back. But since you're okay with losing half of that initial trade entry, then that means that you would be okay to exit out early when you know it's a failing trade. So that's all we're trying to get the mindset in right now. So let's jump back over to the $1,000 account. With a $1,000 account size, okay, I would use anywhere from 5 to 10% of your account, okay? Which meaning that is $100 per trade. If you were to hit 100% trade, guess what? You hit $100 in profit, and then that is 10% of your account size in profit. Now, 5% obviously brings you over to $50 per trade. And you're using less of your account. It allows for twice as many trades. If you were to use 5% of your account there, you would get 20 $50 trades, right? This is on a $1,000 account size. But using 10%, if you want to scale a little bit faster, you would get 10 $100 trades, right? So now, same concept. If you're okay with losing half of your position size, then you have sized properly. As you grow your account size, okay, you go from 1,000, let's say, and you're up to 1,500, then you can start scaling back a little bit if you like. Otherwise, you can keep it up with that 10% and you can use 150. I would not stop using 10% of the account until I got around $2,000 to $3,000. Then you can kind of size back a little bit and start using, $150 to $200 on a $3,000 account. And then you hit 5,000. I wouldn't use 10%. I'd bring it back to $250, $300, maybe $400 at max on that size of an account. Another thing to note: if we end up alerting a play and it is over your position size, there are other contracts you can purchase. You don't have to purchase the same ones we have. Just purchase the same date. Okay, so if we said 5/21 and we entered, let's say a 4/20 call on SPY, all right? Let's say it was $100, all right? It was 1.00. Well, that means, let's say you had a $500 account. That is too expensive for you. So what I would recommend doing is, all you have to do is get a 5/21, and then what? You get like a 480 call, or however much you get a 480 call on SPY, and it might be your $50. Okay, it's not gonna matter, especially for high cap stocks like SPY or Apple or Microsoft, because all these contracts are going to be pretty solid when you buy them. So go in there, find a contract that fits your risk management. All right, there's no reason to follow us in a trade if it's over the account value that you want to use. All right, so make sure you go in there, find one on any of the high cap stocks that we trade. Now, if we're trading one that's a low cap, or like one that's the contracts aren't traded very much, then I would say, okay, really evaluate what you're about to enter before taking a different contract. But other than that, if you're trading any of these high cap stocks or tech stocks with us, you can find other contracts that fit your risk management profile. Okay, so that's really all I wanted to go over today. So you need to make sure you cut your losses if you are losing an amount that you're scared of losing. If you're down 50% on a position and you're not okay with that, then you are oversizing. No matter what, you will be oversizing. So I'm gonna leave you guys with that. If you have any questions, let me know. I know there's plenty other ways to do risk management. This is just the way I've done it, the way I've seen work very successful for a lot of people. It's all about cutting those losses short and then capitalizing on your gains, so then they overcome the losses that you make. Make sure if you start losing multiple times in a row, step back, see why you're having that problem, and then that way, if you sized properly, then it gives you the opportunity to re-enter trades to scale properly, and you're not out completely bankrupt on your account size. So hope you guys enjoyed the video, and I'll see you later.